Hey traders, AKIL'S here. Welcome back to another episode of the Weekend Trading Edge. You are here because you like trading. You are here because you like technical analysis, and that's what you're going to get in abundance today. So I have a feeling this is going to be a very long video, but we got some really cool setups to share and some really cool topics to dig into. First and foremost, we're going to start here on the euro dollar. We're going to start on the weekly chart, right? This is something we looked at in the past on the euro dollar, but I want to remind you guys, because I know we have new viewers to the channel each and every week. Subscribe if you're not already. Big help to the channel as we try to reach 55,000 subscribers by the end of the year. But what we've done on the euro dollar here is two things. One, we have recently broken and closed above a previous level of structure, which is a good sign for bulls. However, we have also ran into another previous level of structure and have held, which is not a good sign for bulls. So what we're doing here on the weekly chart is we're actually putting in, or actually we put in to end the week, a confirmed double top. A double top, we've been having this discussion on the chat lately, so this is a perfect example for you. A double top is when the market pushes up, we pivot at a certain area, we try to retest, and we hold again for the second time, hence the word double top. Now, this is not a double top that I'm interested in trading because we just broke and closed above structure despite holding at another level of structure. If you guys know my philosophy, I have very specific rules for how I interpret a price chart and what each thing means. For example, a break and close above structure allows me to predict that price is likely to go higher. However, a hold at structure stops that prediction that price is likely to go even higher, but I also don't think price may not go super lower because we just broke structure, right? It's a whole thing, right? Pretty much at this time, we have, or I predict, that we're going to be in a period of consolidation. Now, on the side note, there's a whole tariff thing, and there's lots of what if I think the ECB has an interest rate decision coming out next week. Let me just bring this bad boy over real quick so you guys can see it. Is it next week? Yeah, ECB is going to be next week on the 5th. So a lot of stuff can happen, but from a technical perspective, here is what I think. It would not surprise me to see a little bit of relief and to see a little bit of consolidation. If we do, we have two different plays available for us, and they're both going to come in the form of what we call advanced pattern formations. You'll hear them as harmonic patterns as well. So we'll start off with this one here on the weekly because it's very easy to see, and this is going to be a potential bat pattern. This move right here, our swing low to our swing high, is going to be our X to A. Our A to B, as you can see right here, if I catch up with my mouse to my words, there we go. Our A to B is going to be right here, not hitting the 618 retracement, but passing the 50%, putting us on alert for bat pattern. Our B to C comes here on our retracement, and then our C to D would be expected to occur down at the 886 Fibonacci retracement, which comes at a pretty cool level of structure. So a good place that you would want to look for longs, even if this weren't an advanced pattern formation. Now, where things get a little bit tricky is if we go down to the daily chart, and this is where I can sense that two different groups of traders are going to have two different opinions on this setup, and this is common. One of the hardest hurdles to clear when we work with new traders is the ability to read a price chart, the ability to read the ebbs and flows, the extensions, and the retracements, because there's a lot of subjectivity to it. Now, there are different indicators you can use to help you out, but even then, right, there's going to be a difference between what your indicator shows you and what your eyes show you, and that's just the uniqueness of the market. My advice is always this: if you're someone that is truly indicator-based, stick with an indicator and just blindly follow whatever your indicator shows you. If you're someone that is more on the artsy side of that art and science balance that is trading, my suggestion is that you take the time to develop the skill of reading a price chart, train your RAS, your reticular activating system, and the more you do that, the more your eyes and your brain will start to discover and recognize the type of moves that are for you and the type of moves that aren't for you. And again, the whole goal is to be consistent in what you see. You can care less what other people see. It doesn't matter. They're not trading for you, right? Be consistent with what you see. And I say that to say that, right? That's an interesting phrase. I say that to say that. Awesome. That You're gonna have a group of traders that see this, even on the daily time frame, as a swing low to swing high, an impulse leg. However, there's probably a group that says, well, Akil, I actually see this, and then I see that, and I see this up here as being my impulse leg. And if that's the case, that's gonna significantly change what we're looking at. Kind of, right? Bear with me. If this is gonna be our A leg right here, you can see that the biggest difference is that instead of price action nearly missing the 618, we actually do hit the 618, which changes the potential pattern from a bat to a Gartley. I'm going to quickly bring a Fibonacci extension out. That way we can project where our Gartley is to complete at. And that Gartley pattern is going to look something like this. Swing low to swing high, X to A. B is going to be the same. C is going to be the same. That decompletion is going to be different yet the same, right? Different in that it completes at the 127. However, the same in the fact that, if I can find my, nope, that's not what I want. Where's my Fibonacci? In the same that it doesn't complete too far away from that 886, right? Our 886 was down here. Our 127 is up there. So they're in similar zones. The biggest difference, however, is going to be your stop loss placement. If you're looking at stop losses for this Gartley pattern, the small one, I'm just going to briefly measure these out. You're going to see that your stop loss is probably going to be right here. And again, this is that zone we spoke about that is a powerful zone of structure. Not the greatest, wrong tool, Akil, not the greatest place to have a stop. You'd prefer to be underneath it. The stop for the bat pattern would be underneath it, so it puts you in a much safer position. Now, I'm not saying this for you to choose the bat over the Gartley because it has the better stop loss. You want to choose which one you naturally see, but I thought it was an interesting look at this specific pair and the two different ways that traders can view it. Either way, if price action were to go down to this level, this would be a potential long at either your Gartley area or your bat area. Next up is the pound dollar. We're going to start here on the weekly as well. This is very similar to the euro dollar situation where on one hand, we have recently broken and closed above a previous level of structure. However, we have ran right into our next level of structure. So as my mentor would say, we're kind of stuck like Chuck. And once again, we're going to be looking for a potential advanced pattern completion here. Now, what I want to point out here on the weekly is a zone that I find to be very important. It's going to be this area right here where you can see this 1, 2, 3, and even 4 wicks, right? In the workshop this past week, we talked about the anatomy of a candlestick and how to read it, guys. Remember that lesson for you guys that were there? And remember that these candles and these wicks specifically give us a story of rejection. So I do want to pay attention to this level because this was a previous level of resistance that price action could not penetrate until it did penetrate it. And then what happens is previous resistance, which is now past resistance after it's violated, turns into potential future support, meaning that I would look for price action to test this level. And if we are going to hold, big if the bears are going to hold, or if the bulls are going to hold, and stop the bears from pushing this too far down, that's going to be the level that they're most likely interested in. Imagine like playing war games. I remember back as a kid playing the game Risk, where it's like as soon as you take your someone's territory, they try to immediately take it back and you have to defend it, right? And all that fun stuff. So back to the charts. Let's drop down to a daily chart. And let's go one more time frame down to a 4-hour and let's see what's happening here. So what we have happening here on the pound dollar is another potential advanced pattern formation. So we spoke about the bats already that come to the 50% retracement. We spoke about the Gartleys that come to the 618. This one would be a butterfly as we come to our 786. And the butterfly is a very interesting harmonic pattern. It is one that has a very wide range of completion, and I won't bore you or confuse you or melt your brain with that. But what I look for in the butterfly is a 127 inversion. So the butterfly patterns that I like to look at, because I don't trade these, look like this. X to A to B, B to C, and then a CD right down here at this 127 inversion. I'll draw a straight line right there. Another way you can look at it is you can connect the dots, draw out a line from your A to your B, copy and paste it, or just steal it like I'm gonna do, and project that to be your D completion. You can see that's gonna be in the same area, so a nice AB equals CD pattern. Now, what I don't like about the butterfly pattern is that typically that D completion, or well, always that D completion completes below our X leg of structure, but often it completes kind of in the middle of no man's land where there's no type of structure, there's no type of protection, which makes it very difficult and uncomfortable for me to place a stop loss, because my stop loss is placed in a very specific location for a very specific reason. And that specific location is beyond a previous level of structure. That specific reason is because structure is my protection, right? And if I don't have protection, then why am I putting money at risk up into that area, right? Kind of weird there. I could have made another protection joke, but I want to keep this PG if anyone young is listening, but you know what I'm saying. Anyway, this D completion in this case, although it looks like it's a little bit lower, the 127 actually completes right at this level of structure, or at least you have these other levels of structure that you can use as protection as well, right around here. So if you are a butterfly trader and you're looking for something to get involved in, you can set yourself up in a situation like this, where your entry is up there. Your first targets, if you're doing traditional 3D2 targets, would be about right there. You can have stops a little bit lower underneath this level of structure right here, or if you want to be super safe, get them below here. If you want to get somewhere in the middle, you have a nice psychological number in 133 that you can hide them beyond as well. Either way, it does give you an opportunity to have a quality risk reward here and some protection with the butterfly pattern. And also, if you are someone that maybe on the weekly or daily is ignoring that higher level of structure that I drew out, and you're projecting that price is going to continue to the next level of structure, which is, I gotta go to the weekly for this, up here somewhere, or even a little bit higher, then this is an awesome excuse to get involved in that bullish trade, and you're playing this pretty much like a pullback, or is like a complex pullback to get in. Dollar Canada, the loonie is next, and this is a continuation on the opportunity that we looked at last week. Actually, no, it's not a continuation, right? Last week we did look at a bearish opportunity. You can see, bang, it came right into that zone. Nice little ascending channel, and then boom, we started working our way down. We're looking for a bigger bearish trend continuation trade here down to 136.30, so below this level. But right now, if you are someone that is a counter trend trader and you're looking for a structured trade, you may want to pay attention to this level as well. Now, this may sound contradictory, but two things, right? One, trend continuation traders or trend following traders and counter trend traders are going to see the market differently. They're going to believe in different things. Trend continuation traders typically believe that structure is going to be violated and the underlying trend shall prevail. Counter trend traders often believe that structure is going to hold and we're going to see a retracement. Both can also be true, as we can hold briefly at structure, retrace, make profit for those counter trend traders, and then break through and make profit for those trend continuation traders. So don't get all weird. What's key as a trader is that you understand what side of the market you fall on. Are you a trend continuation trader? Are you a counter trend trader? Or if you're someone that does both, like me, you have very specific rules for when you take one over the other, and then how you place targets when you do take those. That way you don't get conflicting signals. Now, just like the, the Euro, Canada has an interest rate decision coming up this week as well. If I still have my tab up, I do. Good job, Akil. You can see here on June 4th, we have an interest rate decision coming for Canada. I believe that they are expected to cut, I believe, right? I think they're at 2.75. Yeah, duh, right on my screen there, Akil. I believe they're supposed to cut to 2.5. I'll do some more research on that, because Canada is it's a pretty good pair for home run trades, because they come out and kind of, well, sometimes they come out and kind of do stuff that the market doesn't expect, but they make it pretty obvious that they're going to do it. So that could be a good home run trade opportunity. We'll track that in the live room as the week goes on. But keep that in the back of your mind. But from a technical perspective, we are starting to see the market slow down as we come to this level of structure, right? Once again, we can tell by the size of our wicks, right? Strong bearish candle, but a little bullish rejection there. Neutral bearish candle, right? We close in the middle. even bigger bullish rejection there, we're starting to see some deceleration, and we'll see that even more as we go down to the hourly chart, right? We have a steep slope right here, whoosh, and then we start putting in a little bit more ebby and flowy action. And what I would expect to happen is the same thing that happened over here, right? Does this not look familiar for you? And then the market turned around, and then does this not look familiar to you? And then the market turned around, right? What? Oop, too far there, sorry. But watch for this same type of look as we come into these previous structure lows and a chance for a counter trend trader to perhaps capture some relief. Now, something we've been talking about as well here is the RSI thing, right? We can track this because we have it, the neck breaker, right? We have it setting up here, where I'll just measure it out for you real quick. We have our previous low right here, which makes this our previous outside return. We have just violated that level, which is step number 1. What we would need to happen after that for the neck breaker signal is a retracement and then a break of that new level, which I'm going to shift right up there. And if we get that and we get some confirmation on the chart as far as a candlestick pattern goes, then that would be a good sign for entry. And again, if you guys are new to the channel, this is not something I'm actively trading right now. This is something that we've been watching. I've been watching it for probably about a year now. I take my time to make changes, right? Nothing is going wrong in my trading, so I'm not in a rush to do anything dumb where I'll start blowing money. But it is something I'm really liking for these type of patterns, because I really love these deceleration patterns, these rising channels, these falling channels and wedges. It's just very, very, very hard for me to enter them because of how they form and the nature that unless they're coming right at a previous level of structure, once again, it's hard to find a good protective stop level. So having a signal that just increases my edge and saying, hey, this is the last turnaround, or this is more likely to be the last turnaround than not, is something that can certainly be usable. So we've been talking about it here on the channel. If you've been here every week, subscribed and stuff, you know that. If you're new, keep watching, and I'm sure you'll hear it again. And I do the neck breaker voice all deep because, I don't know, I think it sounds cool, even if it sounds dumb. So counter trend traders, look for that as we approach this level of structure. Again, just be careful on the 4th for the interest rate decision. On to Aussie Canada, right? The most sideways pair that I watch, although oddly, it's given us some pretty decent directional movement as of late. Now, before we get into the opportunity at hand, for you guys that have been tracking the DKC, right? I explained it the other day in the podcast here on the YouTube channel. We've been talking about it in the live room. The DKC was a strategy that I watched for a year, tested, traded for a half a year, and then ditched it and buried it deep so no one can find it because it's a very frustrating strategy. Very, very profitable, but very frustrating and not good for new traders. But here's a perfect example of that DKC. This would have been your entry right here, this big green guy. And then this is an example of the frustration that comes with it, right? You would have entered right here. Let's just bring that stop loss in. I'll show you where it's at. Stop loss would have been right below this level right there. And you can see that this would have given you a lot of joy as we've gone up, many pips to the fact that you're almost up 400 pips. But guess what? You never hit the other line or the other channel. So as the market retraces, your 400 pips is getting sucked dry. And although there's lots of glory with this strategy, there's also a lot of pain, and you never know what's going to happen here. But this could be an example of one of those painful times. So for all you guys that were like emailing me and DMing me saying, Akil, how do you dare not trade a profitable strategy? How do you not dare share it with us? This is why. And put yourself in a new trader's shoes and ask yourself if you can deal with this without sabotage, or would you have maybe taken profits out as soon as that first red candle came at the top? Yeah, you probably would have sabotaged. Trust me, I know what you would do because I used to be you. Now, anyway, I don't know if we're going to come all the way back down to the stop loss. It's very, very far away. It would suck if it did. But maybe one thing that could help is the fact that we are coming into a previous level of structure right here. And this is actually the trading opportunity that I have on the radar for this week. It is going to be a structure-based trade, right? Look left, structure leaves clues. You can see these two rejection candles right down here, and price is making its way into that zone. Now, we're not there yet, but I do like the fact that we're going there in a pretty, I hope I don't jinx it, a pretty straight directional move. In my personal trading, if we get a lot of chop, it ruins the trading opportunity because of how I have to place targets and blah, blah, blah like that. But if we were to just come straight down to this level and put in a nice pin bar, higher high, higher close, reversal, maybe a double bottom, anything of that sort, this would be an awesome opportunity to trade it all the way back up just to here, just to our previous level of structure, right? Straight counter trend trading, in, out, don't get caught. Look for the next opportunity. So a nice potential counter trend trading opportunity here on Aussie Canada. Pound Aussie is the next one. This one's going to be short and sweet. We've got another advanced pattern formation setting up. I feel like this video is getting long already, so we're trying to get through this quickly. This is going to be another Gartley pattern here where we're looking at a swing low. I measured it horribly, but swing low to swing high, X to A. Retracement past our 618 Fibonacci retracement, A to B, a move back up to retest our A leg, but not violate it. That's going to be our B to C. And then right at this 127, which is going to be a little bit higher. Let me just get this correctly drawn on here. Where did I put you at? 127? No, I had it correctly drawn on. There we go. That's going to be our decompletion right here. And again, this works in a zone where the decompletion starts at this level right here and ends at the bottom of our X leg. Now, something to look for on a lower time frame as well. Two things, just because this is a pattern that has a pair that has a pretty large ATR, is one, a potential bullish counter trend trading opportunity here. So a chance for price to prove that the B leg is a powerful level of structure and it will hold, right? We've seen it test it a few times in the past, so it wouldn't surprise me. And you can look for a little relief back up. Or if we do violate that level, look for a breakout or a breakout and pullback in advance of a move down to here. Let's look at this on the hourly. I haven't looked at this on the hourly yet, but just curious to see what we have going on here. I don't know if there's gonna be enough room for that bullish or that bearish trend continuation play. Actually, you know what? Yeah, the structure zone, starts up here, but the interest really doesn't come in until right around here, right at that 127. No surprise, right? What a quinky dink. So yeah, there certainly could be room, especially as like a day trader. If price action violates this level, comes back, and then, 30, 40, 50 pips to the downside, plenty of room for a day trader or a swing trader here. So, look for those few things here. Counter trend traders, a hold of this level of structure, and then again, just a little bit of relief back up to this level. Or if we do break, either a straight breakout and trade it down, or a breakout retest, and then a continuation downward. Pound Canada on the 4-hour chart. Yikes. Pretty rough end of the week with a few big bearish candles dropping about 137 pips. I'll be interested to see how this opens up, but I do think we can push a little bit further down. If I just bring in my horizontal volume here, this is what's the name of this indicator? Anchored volume profile, and we see where the interest is at, right? There's a little bit of a void right here, and no surprise that we're cutting through it like a hot knife on butter. Butter on a hot knife? Knife on hot butter? Edward Scissorhands? We're cutting through it like a samurai, right? And the next level that I would expect us to go to, right, is right down here where our level of interest starts to pick up again. Again, no surprise that it comes out at a previous level of structure. So let's go down one more time frame here, and we can look at this in two different ways. There is the counter trend play right now. If I just draw a horizontal line right here, well, a little bit lower, you're going to see that we come into this little cute little minor level of support right there. Look at that little guy right there, bringing like a little cute little bear. You cute little bear, right? There's a chance that we turn around there and push back up. I don't see a lot of room to the upside personally, just in how I trade. What I would look for is this. I would look for a pullback. This is very similar to what we did with Canada last week. look for a pullback back into this zone right here, and then look for a chance to trade that down to that level that we spoke about earlier. And that's going to offer a lot of trading opportunity. I guess if you go down to a 15-minute chart, which is way too small for these weekend videos, you can maybe trade something back up there as well as a day trader, but I don't want to go much lower than the hourly on this video here. So keep an eye on that. Keep an eye for a little bit of relief as we start the week, right? A little profit taking, people kind of considering all the stuff that happened at the end of the week and starting a new week, new month, right? But do understand that, hey, we could turn around here, and if we do, we may be able to push down to this level. Just real quick, it looks like a 127 extension down there as well. Let's see how good I am with this Fibonacci extension. Swing high to swing low and back up. Look at that, right at that level. Boom! Aussie yen on the weekly, just to give some perspective. Price has dove down into what looks like the darkness of the abyss. But if you look left, it actually was a previous level of structure. And we started making our way back to reality after that. As we go down to the daily, you're going to start to see not your best opportunity. This isn't a textbook example, but we do have a head and shoulders pattern that is forming. We have a left shoulder there. We have our head down there. We have our right neck right there, connect the dots for our neckline, and then we're putting in a right shoulder as we speak. Now, for the head and shoulders pattern, we do need a violation of the neckline to solidify it. If we do violate this neckline, there's not really a place to go that much higher to the upside. So overall, I'm not too interested in the head and shoulders pattern, but it is going to come into play when we go down to the lower time frame and see what's on my radar. Now, on the radar here on the lower time frame is something interesting, right? We've come down to this previous rejection level. You can see a nice rejection wick down here, a nice rejection wick down there. We have touched, tickled, and tested both of them, and this is a really nice candle. What we would prefer to see after this is a nice higher high, higher close, a break above, close above. So you see how this candle right here, rejection and then a lower low, lower close, beautiful combination, right? We can probably find a million of these, right? You see all these down here. I'm not gonna find any more now that I say that, Akil. I always do that. I gotta find one more for video's sake. Come on, higher high, higher closes. Oh, no, haha, look at that. Another one right here. Nice rejection. Higher high, higher close. The market takes off, right? We see it all the time in the 2 times that I showed you, right? That's what we're looking for at that level. However, we get something quite different. We get what at the time, right? Because we know the wick represents the highest point during the session, was a higher high, higher close, where it looked all delicious. And I'm sure some traders that are suffering from FOMO, the fear of missing out, decided that I'm going to get involved because the move is being made without me and blah, 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 blah. I don't want to miss it. And they got involved only to come back and look at their screen and be like, son of a boop, right? It actually didn't break above, close above. And now they're kind of, maybe snorting the hopium and hoping that it goes in the direction. Or if they are a professional, they wouldn't have broke the rules in the first place. But if they're a professional, what you do is if you ever find yourself in a trade you're not supposed to be in, you exit immediately, regardless of where it's at. So this is not such a nice candle because it shows us that although the bears ran a steam right here and the bulls were big and bad and pushed it up, the bears weren't done fighting and they said, ho, 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 not so fast, my friend, and pushed it back down. We then ended the week with what we call an inside bar. That's a running joke from the live room. 99% of you guys don't get it, and now I sounded like an idiot. But this is called an inside bar. An inside bar is essentially, it's a bar that completes, completely within the previous bar. This big bar is called the mother bar, right? And it pretty much means consolidation, indecision, and we know that contraction leads to expansion. So we would expect a breakout in one way or the other. Now, although you can go and search the realms of technical analysis for inside bars or use a nice little inside bar indicator that most platforms should have. Look at that. and try to trade every single inside bar, I promise you from personal experience, that will be a mistake. My advice is to do this. Have a biased inside bar approach, meaning that although this is an inside bar, you don't really have any intentions of trading this to the downside, because if you were to trade it to the downside, right, your entry would be here or here, if not there or there, depends on how aggressive or conservative you want to trade it. But if you break to the downside, where are you likely to go to? Well, right back into a rejection zone. Well, I don't want to do that. Or right back into another rejection zone. I don't want to do that. That doesn't seem safe at all. So you're probably looking at this and saying, downside, not too much going for me there. But if I were to trade this to the upside, and particularly if we break this higher level, drawing tool, activate, there you go, then where are we most likely to continue to? Well, probably up here, which offers a lot more potential from here to here than the potential we had from here to there. So this is an inside bar, a bias inside bar that you can look to take as a bull. If we break that level, and again, there's two ways you can look at it. You can do the aggressive way, which means a break above this level where you literally just put a buy stop here or above the mother bar. But if we break that level, then boom, you're involved in a breakout on the way up. This also puts you again at the right side or the right shoulder of the head and shoulder. So if you are someone that wants to take this more aggressively and shoot for more, you greedy thing, then you can look to trade this all the way back up to the neckline here. That'd be cool. Spoke about gold a few weeks ago. Now we're gonna head to silver, gold's little lagging brother. Although silver often gives moves before gold, but it's still a little brother. Silver, we have a lot of consolidation. You can see all the inside bars from the indicator that I did not delete from my chart. Let's get you out of here. What I'm interested in comes a little bit lower, right? And it's this period of consolidation. Now, I told you, consolidation leads to expansion, right? And we've been doing just that. The consolidation part, not the expansion part. The expansion part is what we hope happens next. We've been consolidating here, where the market has put in a series of lower highs, lower, and higher lows. It's been a long video. Higher, right? Contraction leads to expansion. The market is squeezing the spring with both hands, and eventually it will pop. There's a non-farm coming out. We've got all types of news with tariffs and renewed news on tariffs coming out next week as well. I think, Friday? Is it June 5th? That Friday? Whatever the new deadline is for that court thing. Anyway, we may break out here. Now, this pattern in general, although it technically comes at the end of a flagpole when you look at it as a pennant pattern, I'm pretty neutral in this pattern. The reason being because we're just not at any specific location in the market that makes me think we would continue higher, at least from a technical perspective. But one clue that I am paying attention to when I look at the rejections to the upside and the rejections to the downside, can you spot the difference? What is the difference between the upside and the downside of this pattern? Well, the upside is slanting down, the downside is slanting up. But if we look at the small clues, we'll see that big rejection candles to the downside here, big rejection candles to the downside there, little rejection candle to the downside here, right? There's really no wickage to the upside, right? There's no wickage to the upside. It's just, kind of normal candle closes, aside from this one right here. To the downside, right, we have some probing of this level and some rejection, some probing and rejection, some probing and rejection, which gives me a little bit of a clue that the bulls may be slightly more interested than the bears in this location. So if you were to gamble, and trading gamble, meaning gamble with the edge, right? Then I would look for reasons to get involved to the upside. Again, there's three ways we can trade breakouts. We can trade before, during, and after. Before would be positioning yourself somewhere in here, maybe going to a lower time frame and finding something. Double bottom, perhaps, if that were to occur, and getting yourself involved. The during would be while we break, and then the after would be the break and the pullback. But could be a decent opportunity here on silver, especially if you have a bullish outlook from a fundamental perspective. We've been kind of stuck here on the shiny metals, as the market's been stuck in general with all the stuff going on. But if you're looking for safe havenness and you think that safe havens are going to continue to rule the game until we get some sort of clarity, this could be one for you. Heading over to my good friend the DAX. It's been so long since I've looked at you, DAX. You've been kind of boring. We've just been looking for trend continuation opportunities here. But finally, you're putting in something new and exciting potentially, and that can be, once again, another potential advanced pattern formation. Now, this one is as smooth as a baby's butt, which, having 2 kids, they're not always smooth. They're smooth sometimes, but then other times they're pretty filthy. So I don't really know if that's a good saying, but I guess advanced patterns could be really, really good sometimes and really, really bad other times. So maybe the baby butt reference does make sense. Anyway, Gartley pattern here, a shallow Gartley, which I'm not a fan of, but a Gartley nonetheless. Let's draw this on. We've done this a million times already, not actually a million times, but probably like 4. Swing high to swing low, X to A, move to our 618, A to B, move back here, B to C, and then right above our 786 is going to be our CD completion for a potential bearish Gartley here on the DAX. One more pattern before you go. This is going to be Bitcoin on the 4-hour chart here. Haven't looked at Bitcoin in a while either, but we have another bat pattern forming. This is going to be a bat, as I just mentioned, getting very, very tired here. Friday night, X to A, A to B, coming to our 50%, not the 618, B to C, got to double click, and then C to D, which we almost came to. So again, a nice little zone right here for your potential bullish bat pattern. If we look left, we can see that we're at a nice little structure shelf as well. Ooh, look at that. Make sure to hide stops below these lows, in my opinion. I don't know what's happening on Bitcoin. I'm not a crypto person at all, so I don't know if we're in a trend continuation mode or not. We may be. Look at that, actually. Let's take a look here. Higher high, higher close. What are we? When did we get back up here? I haven't looked at this chart in like it's the beginning of the year. Okay, well, yeah, if you're looking for a bullish continuation here on the bit of coin, this is a bat pattern, but bigger picture, this bat pattern is also a pullback, a complex pullback, so a multiple legged pullback, right? Into our previous level of structure consolidation. Just like we mentioned with gold a couple weeks ago, if price is going to continue higher, this is probably the zone in which it's going to look to reverse. So nice excuse to take advantage of it. Speaking of taking advantage, take advantage of me. That didn't sound right at all. Take advantage of my content. Yes, by checking out the shorts tab here on the channel. I upload a few different shorts each and every day, giving you quick, helpful tips that will push you along the path of becoming a consistently profitable trader. If you want more, also check out the Trading Coach podcast 3 days a week, covering all the topics that you want to hear about trading. Like before you leave, subscribe if you're new, comment if you have questions. Enjoy the UCL match tomorrow. And until next time, plan to trade, trade your plan. Good night.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.